Hi guys, welcome to Investing with JYK, and today we'll talk about an airport, a Chinese airport, the Beijing Capital International Airport. And contrary to what many people believe, China is a very capitalistic country um, where you can buy toll roads, you can buy airports, you can buy seaports, you can buy national grid, you can buy almost anything like the Three Gorge Dam. You can buy anything on the stock market, which is fantastic. Except you can't buy Baidu because that's public in the U.S. and as a Chinese investor, you don't get to invest in foreign markets. But beyond that, uh, so what I've always, I mean, excuse me, I just had some beer, so the belch is kind of unavoidable. Hopefully that wasn't too loud. Anyway, sorry. The utilities, not like the utility, like things with local monopoly is something that always interests me. For example, you have airports, you have railroads, you have expressways, you have pipelines, like gas, oil pipelines. You have potentially seaports, potentially, and even like funeral homes. Those are like naturally you get a moat in the Buffett sense. So that's fantastic. So I've always kept an eye on airports, and I was gonna buy the Guangzhou Baiyun Airport, and I didn't, and then I just kept on going up on me, and it has doubled or something since I was pondering whether I should buy it. So something happened recently, and the Beijing Capital International Airport dropped by a shit ton, like unbelievably. It went from 11.82 to 8.8. So that's literally 8.8 over 11.82. That is a 26% drop. So something happened, right? Now, what happened was this. They made an announcement. Basically, there used to be this. So in China, when you fly, like in 1990s, early 1990s, you would buy separately the airport construction fee if you want to fly. It's not included as part of ticket, which is kind of strange because you have to buy it if you want to fly. So that now became part of the ticket. And part of that money, well, now it's transformed into some other fee. But in any case, part of that money gets sent to the airport, as the name suggests. It was airport construction fee. So what happened was when was this? This was very. Is there a date? Here we go. May 29th, 2008. I think that was when it was announced. Oh, sorry. June 15th, 2008 is when it was announced that the government agency, CAAC, I think it's called, in charge of that money, now stops giving that money to the public airports. There are essentially three public airports like publicly traded airports in China. You got Beijing, you got Shanghai, and you've got Guangzhou. Actually, there's a couple more. Not sure why they picked those three, but there's more. There's Shenzhen as well, and Xiamen. I think that's public too. You can see that China is really very capitalistic. Like a lot of things are open to the capital. So that would have some impact on their earnings, and that dropped a lot. The price dropped just crazy amounts. So then I checked, like, how bad is the impact, right? So here they very kindly gave me an estimate. It is expected that the revenue of the company for year 2018 will decrease by not more than RMB 120 million. Okay, so 120 million sounds like a lot of money. Now let's take a look at what they earn currently. So this is their statement of income. So they have their revenue is broken down into two sections. One is aeronautical, the other is non-aeronautical, but essentially this just means the things tied to airplanes. This one here is basically the shops within the airport. Essentially they will lease some space out and then get a cut of the revenue plus a baseline. Right? So this is actually really high margin business. This one, you gotta serve these airliners at that point. But I mean, the fee fee coming from CAAC is part of this. But this is, remember, this is RMB in thousand. This is 5 billion. Okay, so if you take 120 million out of this, I don't know what the hell is wrong. Out of this entire revenue, that's 1.3, 1.25% of revenue. If they run a very tight margin, then yeah, that is a problem. Right? So if they're earning, if their profit is 200 million, then yeah, then you just lost a bunch of money. But their operating profit is $3 billion. Take out 120 million, so what? I mean, take out all these financing costs. Obviously, they have debts, right? This is very weird. They have financing income and financing cost. They probably bought some wealth management product. It's a very Chinese thing, but if you want, you can look at that yourself later. But essentially, the actual profit is this: $3.5 billion. Take out 120, so sure, whatever. It doesn't even register that much. So that is why I think this is a fantastic opportunity to buy Beijing Capital International Airport. Now, as a company itself, how good is it? Right? Let's take a look at first of all at the way things have gone. It's gone up from like 60 cents all the way up to about 1 point. So it had a triple in about 3 years, and then now it's down to 1.1. So that's at around beginning of 2017 levels. And if you look at their numbers, PB is 1.4, not very expensive, not fantastically cheap. The thing you always have to watch out for is the book value reliable? Obviously, they don't follow GAAP. They follow IFRS. So I think they will write up their asset if their asset is actually worth more money. I didn't check all their history, but I haven't seen it in 2000. And I mean, if you look at the annual report, 2000, at least in 2016 and 17, they did not appear. That would be in other comprehensive income. This is the comprehensive income statement. Usually, the change in the right up portion would appear in here, but nothing really happened except some, you know, retirement benefit changes, which is tiny. So yeah. So they're reasonably cheap. Their margins crazy. Their operating margins crazy. ROE is okay, not fantastic, but they have potential to grow. So that's something that I want to get into. So let's take a look at a file from the Chinese government. So this is something that you do have to pay attention, because the company is either partially or majority owned by CAAC. Now, what they want to do will change how things work. So let's look at what do we have? We have here. It says so it says consolidate regional airport resources at using Beijing, Shanghai, and Guangzhou, using large international hubs like Beijing, Shanghai, and Guangzhou to consolidate regional airport resources, and to realize regional airport clusters, into the development of airport clusters, and to make 3 world-class city groups, which is first group is Beijing, Tianjin, and Hebei. So those are those 3 things, those 3 regions. The others you probably don't care that much. This one is basically the Yangtze Delta, and this is the Zhejiang Delta. Okay, so the major thing here is to, I don't know how to translate this. Essentially, what's happening is both Beijing, Shanghai, and Guangzhou are congested. Those 3 airports are all running above their maximum designed capacity in terms of both traffic and like passenger traffic and number of landings and takeoffs. And so they're trying to use the Beijing here, using the Beijing capital airport as a trial, to find a mechanism to offload. Yeah, offload. This should be offload. To offload flights in large international hubs, and to increase, so some bunch of stuff, and then to increase the coverage of international flights, and then the portion of international transit. Okay, so let's think about what that means for Beijing Airport. Let's go to the annual report again. They discuss this number, right? Aeronautical, they discuss this number. Let's take a look. Somewhere around here. And so this is basically, you know, what happens, and then part of airport fee, they actually discuss. There's a fund somewhere, and then they don't, you know, they used to get a payment out of it. So if you go, wait, what? International. There was a, yeah, overview of aeronautical business. Look at here. So for airport movements, international is less than 20% of the total. For passenger throughput, international is slightly more than 20%. So it's very low. To give you an idea, if you look at airports like the Seoul airport or even Narita, Japanese ones, a lot of them have above 90% international transfers. So they really act as a international hub. In the Beijing Capital Airport case, 20%-ish. Right? So now let's think about what happens if you increase that. If you increase international portion, that means you get more international travelers, and international travelers, I haven't done the research, but logically they would have more income, more disposable income, more spending power, and their fees will be higher. For the same flight, if you fly from Beijing to Shanghai, you take about the same amount of resources in the airport compared to, you know, Beijing to New York. Maybe you have like customs and whatnot, but that's about it. But your fee is much higher if you go to New York, so the margin will be higher. And on top of that, these people will have longer to wait because international flights in China, you're suggested to be there at least 2 hours ahead instead of 90 minutes for domestic. And then when you have a bunch of time on your hands, you buy stuff, and then you can now develop duty-free, which is not a thing that you can do with domestic. And you can have fancy restaurants, which is less appealing if you're doing domestic because you don't have as much time. So all that, so by driving up the international portion, you can get a lot more revenue with the same cost, essentially. Because the majority of the cost, if you look at, not the majority, but a large portion of the cost, operating expenses, is depreciation, right? $1.4 billion in depreciation. And everything else, I mean, utilities aren't going to change too much for an international flight. Staffing costs might be slightly higher. This thing, I don't know too much. Real estate is not going to change. Taxes won't change. Maintenance, environmental maintenance won't change. Rental expense won't change. GA probably doesn't change. So majority of that won't get changed. Repair and maintenance, that won't change. So a lot of these won't change, except maybe this security will go up a little bit. Staffing might go up. We don't know. So yeah, so it's all good things. Essentially, you get better, you get more revenue, you get better clients in terms of spending power and all that. So that's all the good things about Beijing Capital. Okay, so and the other thing is they do pay a dividend, so it's not some, they're not faking the numbers, because that's always a worry. If you, this is stupid. If you just blindly trust Chinese companies' reports, here this says a 3.3%, 3.4% dividend yield, so that's reasonable. It's not fantastic, but it's reasonable. And if you look at their balance sheet, let's just take a rough look. Balance sheet. Ugh. Where's the balance sheet? here. Okay, let's see what they have. Property plants going down, depreciation very normal, land use rights going down. So that's actually oh, this is non-recurring. I mean, recurring is going to be pretty boring because I mean these guys have cash. I don't even know what the hell inventory is. Maybe candies or something. I don't know. But this is their majority, right? This is tiny. And land use rights, intangible assets, very little. Don't know what that is, but don't care. Land use rights, it's going down by a tiny bit. So that's like a write down. And that's it for non-current. So majority is here. And for current asset, you've got a bunch of asset held for sale. Not sure what they're selling, but whatever. You've got cash and receivables. Well, actually, no. The held for sale is only this much. That's tiny. This is the total of these guys. So inventory plus whatever. They used to have a bunch of cash. They have fewer or less cash now, but they have 3 billion yuan in cash, which is still considerable, given that their revenue is only $9 billion and their earnings only $3 billion. So okay, so in terms of their liabilities, ignore that. They've got $3 billion in long-term debt, $1.2 billion borrowing from parent company. So total, you got $5 billion. They have $3 billion in cash, $5 billion in borrowing. They're earning $3 billion a year in profits, not necessarily cash flow, but for this company, I predict, I haven't seen it, but I think the cash flow is going to be higher than the operating cash flow is going to be higher than the income. Current liabilities, $4 billion, mostly payables. All right, so that is probably going to be offset somewhat by the receivables. Whereas the receivables, $1 billion in receivables. So you do have the working capital is negative at the moment because of this. But total, they got $9 billion in liabilities, much lower than they were in 2016. So there's some deleveraging going on. Mostly is paid off here. And what else happened? What else happened? They paid off a little bit here. Oh, they no longer have short-term debenture. They paid both that off. That probably explains. I think that explains the cash drawdown. Those two went away. So their cash position is pretty healthy. They got, they can more or less cover their current liabilities with current assets. If you look at current assets, 3, so 0.7, but it's a very stable business. So I mean, if you look at Walmart, the current asset is probably lower than current liabilities. Yeah, so that's what you have. And if you look at cash, where did the cash flow go? Wait, what? No cash flow statement? That is insanity. What? Okay, you don't have a cash flow statement. Holy shit. But, okay. But you can kind of get what the cash flow is because PPE actually went down. So that didn't increase. This did not increase. Nothing in long-term asset increased. Nothing in current asset increased. And liability went down. So you can think about where that money comes from. Essentially, operating cash flow must be much higher to cover for the payment, which is those two. That's $5 $6 billion. Got 6 billion, not dollars, yuan. That's paid off. There's a reduction in the loan here. Right, so you're looking at like 300 million, so 600, and that basically offsets this basically. So let's ignore that. There's some money paid off here, but essentially you're looking at they paid $6 billion off, and their cash reduced by, where's the cash? The cash reduced by less than $3 billion. There you go. So that's your $3 billion of profit, basically, plus a little bit of depreciation, because that depreciation is counted in income but not counted in cash flow. So that goes into the cash flow as well. Anyways, I cannot believe they don't have a cash flow statement. This is the craziest shit ever. So very healthy balance sheet, I would say, for a stable business like an airport. Now, what else is there? So as I said, the airport is a local monopoly. But what if somebody decides to build another airport in Beijing? And that is happening. There is a... If you look at Beijing Airport's Wikipedia page, ignore all that stuff. If you go to here, they're gonna build a new airport, which is this Daxing Airport, which is gonna have the same capacity, 7 runways. Beijing Airport, capital, has 3 runways. This thing is going to have 7 runways and do 100 million passengers a year when fully constructed. It will be finished by 2019. But at the beginning, it won't have 7 runways. It will have 4 runways. So, it's going to be like partially complete. It's going to be like a hexagon, not a hexagon, like a pentagon, like a star shape. And then, well, you can see it here actually. Yeah, this is going to be the shape. So they probably just open like 3 of those and leave 2, or open 4 of those and leave 1. In any case, this obviously is going to be a concern for Beijing capital, as it will draw a lot of flights away from Beijing capital. But if you think about cities like New York, Beijing has a lot more population, I think. Let's take a look. In terms of population, this thing has 21 million, and then the metro area has 24 million. What about New York City? New York City has 8 million. Right, so it's the entire CSA, so including the tri-state area, the whole place is 23 million. And Beijing, looking at the map, the metropolitan area is really this. Then you got Tianjin, which is another city, and you got Shijiazhuang, which is another city, and Tangshan, that's another city. Baoding is an industrial city as well. So this place is actually much more densely populated than New York City in terms of all its boroughs. Right? And then in New York City, you've got Newark, you've got LaGuardia, you have JFK. So if you look at Newark airport, right, so this stuff served 43 million people. And think about Beijing, that stuff served about 90 million people currently. And you got JFK, JFK airport, right? That stuff had, how many we have? 60, about 60. So you're already at 100 million, right? 43 plus 43 plus 59, 102, and then LGA, that has served how many people? 30 million, right? So 132 million people flew out from the New York City airports. And that place has 8 million people. If you include the tri-state area, you have 24 million people, but Beijing alone has 21 million people or something. Beijing alone has 21 million people urban and 24 million in the metropolitan area. And around it, they are also building a thing called Xiong'an. Somewhere here, I'm guessing. Yeah, here we go. No, that's Ku'an. Where the hell is Xiong'an? Let's just add it. Where the hell is Xiong'an new area? There's a map. That is very useless. Ah, okay. So this is, I can't even recognize this. This is Beijing. This is Tianjin, and this is Xiong'an. Okay, so that's somewhere down here. God. Let's see. Oh, here. Yay. So they're building one. Xi Jinping basically pushed really hard for to build a brand new region here for industries and high tech and everything. So that will need to be served by some airport. You've got. So I've marked out these are all airports, right? This is the one that's proposed to be built. This is the current airport, and this is Shijiazhuang. And this is Tianjin. So if it's here, the closest one, these are Tianjin or the new Daxing one. So let's. Oh, this is Nanyuan actually. Daxing is here. You can see here. Daxing is probably somewhere here. It's going to be built. What is being built at the moment. And this is Nanyuan is the old one. It's going to get demolished after the Daxing airport is operational. So to conclude, essentially we've got a airport in the busiest. This is the busiest airport in China, the second busiest airport in the world. They currently have 80% domestic traffic, 20% international. That will change because of policies. They are valued at reasonable multiples, 1.43 in PB, about 16 in PE. They will be growing very profitable things like duty-free and whatnot due to the increase of international travelers as a proportion. And they recently dropped 23% or so because they will lose 1.3% of their revenue, 120 million out of 9 billion plus, and they will basically won't even make a dent in their earnings report. They will have a competing airport coming online in 2019, but that wasn't the reason it dropped, because that airport has been planned forever. If you look at right, so this thing was planned. When was that? Planned. It was planned a while ago. Approval was completed in 2013, so this is old news. Presumably that should be factored in the market's valuation of the company. And yeah, so even if that thing gets built, it is possible that the main purpose for that is going to be serving mostly the Xiong'an new development area people. And according to what I know now, they will move. Where is this? I forgot where I saw it, but the SkyTeam airlines, so the two of them in China, will go to Daxing, and then the Star Alliance people will stay in Beijing. And I think currently is a fantastic time to enter. Mostly because of the recent 23% drop. This looks, if you look at just 5 days, this is beautiful. Beautiful. You can buy it in US with this ticker. There are a couple of tickers. Find the one with highest volume. I think this one has higher volume. Yeah, well, this one's even 5 days. Oh my god. Nope, I'm wrong. There's no volume. But anyways, find one that suits you and buy some. I highly recommend that. If this is useful, click like, subscribe. If not, dislike, tell me why you don't like it. And as a shameless plug, I will also show you I will recommend a video to you from my sister on our Japan trips. So if you want to learn more about Japan and have a laugh, I recommend this. See you next time.